What a name for an episode, right? FUD special.
We've had a great run from October till March. We're starting to see the early signs of FUD.
And what is FUD? FUD is fear, uncertainty, doubt. In crypto, you are going to deal with your friends and family sort of bringing these things up. So it's nice to be able to sort of have a response.
Okay, Warren Buffett says his rat poison square.
That sticks with you. The truth is that a lot of people don't actually really think for themselves.
There is no technology upgrade to human behavior. 1700s, South Sea Bubble. Who was one of the most famous people who lost money in the South Sea Bubble? Sir Isaac Newton.
But at some point, you just have to say, I don't get it, but the thing has merit, right? You can say you don't understand something or why other people value it. Like there's many things that I don't value in this world. And I'm sure there's many things that you don't value in this world. You don't point at those things and be like, they're worthless because other people value them. And that's how markets work.
Technology innovation, there are certain risks associated with it. Technology is always neutral. Does electricity care? Electricity doesn't care. Does Bitcoin care how it is being used? Bitcoin is a network. Bitcoin price goes down by 20%. It doesn't care. FTX gets bankrupt. It's a Ponzi scheme. Bitcoin doesn't care. Same goes with Ethereum. They just continue working as a decentralized technology network.
When FTX went down, that's a Bernie Madoff. Like that's what you're dealing with there. It has nothing to do with the technology.
1700 till 2024. Manias will continue, people will continue to ignore, and incentives and greed will continue to flourish.
You would have to ban computers. You would have to ban electricity itself that runs the computer. You would have to ban the internet, I think, as well, to be able to actually stop crypto. And then you would have to break like the Constitution, like the open source code has already been, that's considered free speech in the US. So I think our next topic here is this is a great one. This is Bitcoin is bad for the environment. The sustainable energy mix is almost 60% for Bitcoin mining. That's the most sustainable energy mix of any industry on the planet.
They use electricity, right, for the electric cars. Do they ask where are they getting the energy source from? So why are we not singling out Bitcoin? Why are we not talking about gold? Gold produces more carbon emissions. Just look at the amount of, gold mining sites, whether it's in Brazil or in Australia. It's terrible what happens.
We can move on to the next FUD argument, which is usually Tether. So 10% of Tether was withdrawn in 24 hours during the Terra Luna debacle. 10%. That would take down literally any bank in the world.
Now there is no reason to bring this up. So much of institutional flow going to Bitcoin. Tether, it can't impact Bitcoin price. It may, but...
We have an ETF. Yeah, that's the other thing. We have an ETF, so it's like, I think the SEC looked at this, obviously, and they wouldn't approve the ETF if there was some manipulation with Tether. Crypto's not decentralized because FTX. What are we actually talking about here? Government could ban Bitcoin.
This is the biggest FUD.
And China has banned Bitcoin.
Joe Biden is, I think his administration is introducing a 30% mining tax, which will probably make the US miners think about going to a different location to start, because it's a game theory, right? You want to be most efficient when you're producing Bitcoin. Countries that are going to ban Bitcoin, they are digging themselves a hole. It's a decentralized network. We've covered that it's a good store of value. Bitcoin is actually a friend of all governments. If you can hold gold as reserves, you should hold Bitcoin as reserves, because eventually when you realize that a country has got a lot more of Bitcoin, you're going to be a late entrant. I'm just going to quickly send this episode, spend 1 hour with your family, hear it, and then come back to me. Welcome everyone to episode 20 of the Rundown Podcast. I'm Shiv, and I got our friendly co-host Michael with me, and you're welcome to your one-stop shop on all things crypto and on-chain analysis that we do with our residence expert Michael. We've been doing this for 20 episodes now, so we have crossed the barrier now. And before I jump on to you, Michael, one of my colleagues, he's a professor of marketing at Imperial College London. And when I started the podcast, he told me that, Shiv, that only 10% of the people that start their podcast and release their first episode actually reach the 20th episode. So 20th episode for me was always a big thing, that when we started collaborating, I knew that we were going to cross it. But I was like, I just want to see that journey and reach to the 20th episode. And look at us. Today, we reached the 20th episode. We are now part of the elite podcasters club of the first 10% who made it from 1 to 20. So congratulations to you as well. And thanks all to the Rundown viewers.
10% club. I'll take it. I'll take the 10% club. We're not in the 1% club just yet, but that's coming later. But no, it's great to be back. Great to see you, Shiv. Obviously, a lot going on. I think our timing, if we're going to talk about just the podcast, I think we started in October, so we've had pretty good luck here in terms of just the correlation with each episode of the Rundown and I guess where the Bitcoin price and the crypto markets are going. So yeah, excited for episode 20. We got an exciting show today. We touched on, I think last week a little bit, or maybe it was 2 episodes ago. We're starting to see some FUD coming into the news feed a little bit. And we thought, it would make sense to do an episode just kind of going through FUD, defining what is FUD, where does FUD come from, why do we see FUD? There's sort of like a meta game to FUD that we want to get into. Excited for this episode.
Yeah. Before we continue, I want to say the famous saying, especially all the politicians in the US often say it, fortune favors the brave, my friends. So I think we definitely got lucked out with the timing, but at that time when we started thinking about doing this, people were not into crypto. It just happened to that our market timing was good. So fortune favors the brave. Congratulations to you and the DeFi report as well. All the success that the DeFi report is also doing. But yeah, look, I'm also excited with this episode. FUD, we've had a great run from October till March. We're starting to see the early signs of FUD. We discussed it 2 episodes ago with one of the famed professors who always targets crypto, coming up with sensational academic papers. But yeah, look, I think this is going to be a very informative episode for all the crypto YouTube and crypto podcast listeners as well. So can't wait. But before we jump in, should we talk about the great Dencun upgrade and the great stuff Ethereum developers are doing?
Absolutely. We had Chan on last week, so we didn't really address the EIP 4844 update. Huge success once again. So shout out to the Ethereum developers, the real heroes, I would say, of the ecosystem. I think something that's interesting about just the Ethereum Foundation and all of the work that they do for the ecosystem is these guys could be launching layer 2s and launching tokens or launching projects, and they're not doing that. They're committed to actually just building out this public good that is Ethereum. And so that does not get talked enough about, or just the fact that they're able to execute these incredibly difficult technology upgrades for the network. I think the merge from proof of work to proof of stake was one of the most important and technically challenging upgrades to a computer network I think we've ever seen. And EIP 4844 was the biggest upgrade since that time. So over the last year or so. So I think it's gone very well. What this has done is reduced fees at the L2 level. I know you have played around a little bit. I have as well. I would say the user experience from the transaction fee perspective has come down significantly. And people can go to l2fees.info and look at, what people are paying to send ETH or swap tokens now on some of these L2s. And, Optimism, Starknet, Arbitrum One, it's less than a penny currently to send transactions. So yeah, I would love to get your thoughts on EIP 4844, the success of it, and then maybe we should get into what does this potentially mean for the rest of the cycle as well.
Yeah, absolutely. Yeah, look, I was very excited, and because this was quantitative as a user of the network, I was also curious to just check it out. So I did some cross layer 2 swaps as well, just to test it out with a very limited sum of US dollar amount. It was a 4-figure US dollar amount. This is my experience. This was my experience, of course. Arbitrum was slightly more expensive than Optimism and Base. I tried Base as well. Base and Optimism were fairly roughly the same, but Optimism was slightly cheaper than Base. Arbitrum, while the fees has come down significantly, but if I compare Arbitrum with the other 2 L2, based on the swaps that I was doing between the layer 2s, I noticed that, for example, Arbitrum, for a 4-figure US dollar transaction, Arbitrum, the fees that it would charge me was around $1 point something. But Base and Optimism were in cents. Base was, I think, 55 cents. Optimism was 45 cents. So that was my observation. So I think a great win for the engineers. Price action and all the manufacturing of financial products that we do means nothing if these engineers produce these amazing upgrades all the time And that also real time, right? I know Chan in the last episode spoke about the analogy, which is, changing the engine while, the automobile or the train or the flight is still flying. So it's a very complex computer science problem. And considering it's like a decentralized project, the way they are able to handle from a project management perspective, like it really requires a lot of applause. Not many people talk about it because it's not sexy. Price action is sexy. But yeah, a lot of kudos to them. We can see the great results from the engineering in the fees as well. And it's good that you've mentioned the website. People should check that out. But yeah, it's great. When it comes to your question, addressing your question as to what would it mean for the cycle? Look, difficult to say, because after I used it and I spoke with some of my inner circle people who have been in crypto for quite a long, they are still of the opinion it's layer 2 at the end of the day. There is this extra friction. It's not like a layer 1 like Solana. So that is a fair argument that there is. And look, when I did cross swaps between these layer 2s like Optimism to Base, yes, there is friction involved. There are not many cross swap exchanges out there that do it. Yeah, so there is a friction out there. So what it would mean for the cycle for the immediate term, I'm not sure whether it would have a massive impact, to be honest, especially considering the momentum that we are witnessing with Solana. So I'm not sure, but long term, definitely it's an amazing thing, because Ethereum is an institutional smart contract platform. Solana has still a long way to go to reach there. So long term, great. Short term, not sure whether it's going to take the momentum off from Solana.
Yeah, there's a lot. I mean, obviously the ecosystem's constantly evolving. If you're lowering fees on L2, what does that mean also for value accrual at the ETH level, right? If you could package more transactions at the L2 level into a block that then gets paid at the ETH L1 level, then that potentially impacts the profitability of validators down there as well. So I think some people are looking at it and saying, well, if transactions get really cheap on L2, then that's going to impact the amount of ETH being burned and potentially less value accrual to the validators at the L1 level. I think that is possible that's what we see in the short term, just because of the improvement. You sort of like have opened up a glut of supply, right, of new block space at the L2 level. But historically, what we've seen is that when you increase the supply of computing resources, they do get gobbled up, right? So basically a new use case will emerge that wasn't possible previously. So that's what I'm expecting to happen. So I do think it's actually accretive to both the L2s and the ETH L1, because over time in the long run, I believe, see more new use cases. And yeah, we're seeing just a proliferation, I think, in general of L2s on Ethereum. More of that to come. But yeah, I think it's exciting for the ETH ecosystem. And probably the next major challenge is, as you mentioned, like on the user experience level, where bridging assets is very clunky still. And so that needs to get solved, where you sort of abstract away, where the user is interacting, and the user is not actually clicking a drop down to go to Optimism or Arbitrum or in bridging assets. It's kind of crazy to think that, that's like in the early days of the internet, like selecting which protocol you're going to interact with as you're using the internet. So very early stage, I expect that to get solved. And when that gets solved, now you're sort of potentially at that same user experience as Solana, right? And Solana doesn't have that challenge today. So exciting. Nonetheless, shout out to, again, the ETH devs for all the hard work. And yeah, maybe we can move into the show, the FUD special that we want to get into.
Before we jump into FUD, it's a very valid point that you've raised. And I just want to double click on it. There are actually two things. So firstly, about the increase in block space availability that you mentioned. Absolutely spot on. I totally back what you said. And we've seen it with the evolution of computing power, right? Like a lot of people initially during the 90s or 2000s said that, computers are so fast. What are they going to be used for? The skeptics always said that, this is so fast. Like, why do we need this thing? But we always find ways. And, I just recently saw the full 2-hour Lex Fridman podcast with Sam Altman. And he addressed his concern that you wanted to raise $7 trillion for chips. Do you think that, we need that? And Sam Altman said something very similar to what you said, that we've always seen, if we have more computational power, we will eventually use it. And it's good for innovation, it's good for the world. So I totally agree with you. I think the people who are having that, value investing sort of a mentality and say like, what's going to happen? Eventually, more people are going to find use cases of it. So I think that's a good thing. Yeah, look, FUD special. Let's jump on to FUD special. Otherwise, we can continue on talking about this. I agree.
No, I couldn't agree more. And what a name for an episode, right? FUD special. So yeah, why don't we kind of transition here? So I think the context for why we want to bring this up with people is just related to where we're at in the cycle. We tend to, when the price of Bitcoin rises as much as it has over the last quarter or so, you will see people come out of the woodworks with FUD. And what is FUD? FUD is fear, uncertainty, doubt that you see sort of pushed into the market narrative in some way. So it can come from various places. It can come from a mainstream media outlets like the Wall Street Journal or the New York Times, places like this. It can come from sort of academic papers like we shared a few weeks ago with, I believe, the same author that wrote the Tether piece a couple cycles ago or last cycle. It can potentially come from like the regulators or policymakers. We've seen, people like Elizabeth Warren and building an anti-crypto army, things like this, like these narratives, like why do we have to be anti-technology? It's kind of weird. So these are kind of, I guess, some of the places that FUD sort of comes from, like directly. I'm curious if there's anything I missed there in terms of what you see, and you've been in crypto for multiple cycles. Is that fair, I guess, in terms of the actual sources of the FUD? But I think where we actually want to take this is more to like, what is the meta game of the FUD? Like there's some reason, there's some agenda, there's something going on. But yeah, curious, I'll pause there.
I think you've explained it quite well. But yeah, just for the viewers as to what is the motivation of Michael and I to have this episode, especially, as the 20th episode, is that we as experienced participants in crypto have noticed a pattern where there are these skeptics that when things starting to rise and get increased adoption, they just, come back and start attacking this. Because crypto is still a nascent asset class, these sentiments would have an impact on the prices. They've got their own agendas. One of the agendas could be that they missed out, and because of their influence and power, they want to introduce these FUD so that there is a drop in the market, and then they can buy it. And then once they're comfortable psychologically that they got a good opportunity, a buy-in, then after a few years, then they're going to say, okay, this is a great product. We're building financial products. To be honest, we saw with Wall Street, right? 2017, it was an index for money laundering. A lot of Wall Street professionals say. 2018, none of their clients wanted. 2019, they're looking at it. 2021, they're fascinated by it. 2022, it's bigger than government. 2023, they're launching an ETF. So we've seen this evolution. We know that there are a lot of institutional players that are still not participating in this. And that's a worldwide thing, not just a US-centric thing. So that is a very big agenda for a lot of people that they haven't got in their psychological mindset a buy-in. So they're going to use their influence to, put it down so that they can get it in at their psychological comfort level. And then they can come back and start saying, oh, it's a good thing. I've seen this in India as well, for example. I'm currently in India. I've seen, billionaire bankers who are in the Bloomberg Billionaire Index who said that we should ban this. It's a, threat to sovereignty of India. Now saying that we should introduce regulations so that we can manufacture products like the US has manufactured it. So that is a big thing that a lot of people don't take it into account. And the only reason why I'm bringing it up quickly, and I know that we've discussed this, is that a lot of people, and I say it with all respect to the audience and everybody, a lot of people are sheeps, for lack of a better word. That famous Wall Street saying, sheeps, like they follow. And so with that in mind, a lot of people, they educate themselves, this is the way to invest. They don't understand this asset class. So then they go on and say, okay, let me look at my traditional finance heroes. Who are they? Okay, Warren Buffett says his rat poison squared, which we're going to cover eventually. But he says his rat poison squared. So anybody who follows the value investing approach, they are like, okay, it's not a product to invest. So because there is dearth of traditional finance heroes at a global level, right? Not many of them. That's why, a lot of people are behind. But then as soon as those influential people, they have a good entry point to invest or create products around it, they get in. And then suddenly all the other sheeps, they're like, okay, yeah, this was a great product. This was a great product.
Yeah, interesting with the sheep's commentary. I agree. It sounds a little harsh, but the truth is that a lot of people don't actually really think for themselves, and they are sort of outsourcing their opinions to someone who they think deserves that. I don't know why, but like, I think you have to go to the first principles and just kind of do the research yourself. And people that have done that with something like Bitcoin would disagree with Warren Buffett's view of it. But yeah, I think to me, this is sort of the meta of all of this. I think one thing that I've observed through these cycles is like everything about crypto is rooted in money in some ways, not just the fact that Bitcoin is viewed as digital gold, but just the fact that, everything related to crypto is like investable, which is just sort of different. It's woven through everything within the industry. And, I don't know, I think this depends on various cultures and different things like that. But I think in the US, people are uncomfortable like with money, with talking about money. And then you look at the crypto industry, and when you get into a bull run, like people are, shouting like have fun staying poor and things like this on crypto Twitter. And this just turns people off. So it's a huge turnoff. People, if you did not invest in crypto, let's say you thought about investing in crypto and you didn't because you saw this type of behavior and you just didn't trust it or whatever, and then the market goes up, 3, 4, 500%, what is your reaction going to be? Like, my opinion is that most people do not have the ability to be like deeply sort of intellectually honest with themselves about and then sort of revisit, what was the thinking originally? Has something changed? Is there new information that should be sort of brought into the analysis? Most people are not willing to sort of do that when they've been proven wrong on something. Rather, they will convince themselves of some other story that justifies their decision initially. So instead of saying, oh, I missed crypto, that was a mistake. Oh, crypto's a Ponzi scheme. Or this is, they start to make up other stories to justify the decision. I see this just constantly, just anecdotally, and you see it. I've been observing this with Jim Bianco. Not to call out Jim Bianco, I actually think he's great from a macro perspective, and I follow him and read his research. But he's been, opining on crypto now, and he was sort of saying that his outlook for crypto for this year was bad. And I saw him put this out there. And obviously he's been wrong about that. Now, what you see him doing is he's sort of coming up with all these other stories about how these flows into these ETFs, they look like degen flows. And he's projecting out that there's going to be a rush to the exits and this is going to be a catastrophe. And, he's sort of twisting himself into a pretzel when probably could just be intellectually honest with himself and go back and study why he thought this was not going to be a good year for crypto, and then look at the new information and say, okay, I was wrong. Like, and, maybe you change your mind or whatever. But for whatever reason, people have a hard time doing that, especially if you're a public person, I think. So I think this gets woven into a lot of the narratives we see. There's confirmation bias. Confirmation bias is sort of woven into this. It's hard, again, to admit you're wrong, change your mind, take in new information. And if you're an investor, these are critical things for investing. You can't attach your identity to things. And so I think all of this, I'm rambling a little bit here, but this is really where FUD comes from, in my opinion.
Yeah. So just quickly, so Michael and I are friends. Outside this professional partnership that we have, we both are friends, and we both know each other personally as well. And we can assure you, neither me and neither Michael are in the business to putting people down or putting, groups of people down. So if we are mentioning names like, if I'm mentioning Warren Buffett or Michael is mentioning James Bianco, we have no intention to put anybody down. We're just observing their behavior and making a comment and respectful comment about it, giving our opinion about it. So based on that, like, you are spot on that. I think we both are aligned. And I just want to point out again the famous quote that you said on the podcast. There is no technology upgrade to human behavior. 1700s, South Sea bubble. Who was one of the most famous people who lost money in the South Sea bubble? Sir Isaac Newton, the famous scientist. And then he famously quoted, I do not know whether it's true or not, but it's very popular in the popular culture, that he said when he lost money in the South Sea bubble, that I can, calculate the mathematics of nature and universe, but I cannot calculate the mathematics of human biasness and foolishness. So for somebody like Sir Isaac Newton to say that, it has some weight. So coming back to that point, like just because we mentioned a few names, just because I have said that Warren Buffett thinks Bitcoin is rat poison square, doesn't mean that I disrespect him. And I respect where he comes from with that opinion. And Warren Buffett, for example, he's been very intellectually honest at times, saying that, IBM, he made investment in IBM. He went out and said that it was a bad investment. He lost money in it. He should stick with things that he understands. He didn't invest in Apple when he got the opportunity because he doesn't come from that growth investing mindset. But then Apple, when they started introducing cash flows and getting all that massive revenues, he invested in it because it fit his criteria. Look, people, they've got their own methodologies. If they are not educated in it or if they don't understand it, they shouldn't do it. The problem is, and now I come back to crypto Twitter rather than talking about TradFi who put crypto down, because we discuss it all the time. It's a good point that you raised that crypto Twitter or people who are in crypto shouldn't put the TradFi people down. We should actually just have a healthy discussion with them and, help them to cover each of their doubts or issues one by one rationally rather than putting them down. Because it is when you put people down, that's when emotions come in and they are like, no, we're not going to get into it. So yeah, I totally agree with that. Human behavior, no technology upgrade. 1700 till 2024. Manias will continue, people will continue to ignore, and incentives and greed will continue to flourish.
Yeah, well said. I mean, just to hit on the Warren Buffett thing too, like, I don't know how long ago it was that he said those things, and he continues to be like, I don't think he wants to even talk about crypto or Bitcoin, but like people obviously ask him about it, especially in a bull market. And, he's sort of outlined why he doesn't think it makes sense because it doesn't have the cash flow and things like that, which is fine. But at some point you just have to say, I don't get it, but the thing has merit, right? You can say you don't understand something or why other people value it. Like there's many, many things that I don't value in this world. And I'm sure there's many, many things that you don't value in this world. You don't point at those things and be like, they're worthless because other people value them. And that's how markets work. So it's just, to me, I don't understand it. I mean, Bitcoin is larger market cap than Berkshire Hathaway. Today, it's obviously wildly outperformed Berkshire Hathaway. So I don't know why there's this reluctance to just acknowledge that other people believe it has merit. And like, I sort of blame the journalists who interview him. And part of this is just his legendary status. Like he doesn't get sort of actually questioned on this, but very simple question to just learn if he actually knows anything about Bitcoin would be to just ask him, like, can you explain how the economic structure works of mining? Something like that, just to see if he actually has a view on it. That would at least help, to use your word, the sheeps understand who they're following. You know what I mean? Because you kind of want to know that if he's well educated on the subject. But yeah, I think that's where a lot of this comes from. Maybe we should just like kind of go through some FUD that we will probably see at this cycle at some point. So I think the first one we had, the classic one, and this is bull market, bear market. We see this one all the time, but it's criminal activity, the illicit finance, the terrorism funding, really just this, using like really nasty words to describe crypto. Like when you see someone like, especially like Rat Poison Square, like that sticks with you. It's like this visceral reaction. And like these people that want you to believe these things, they always use those types of words because they're trying to strike your emotion, and emotion is deeply tied to your memory. So if you use these like really nasty words, it strikes an emotional chord with people. And then that's how they remember the thing that you associated it with. So when you watch people, the policymakers of the world that want to push this narrative, they always do that. They always want to associate the nasty word next to crypto and strike your emotional chord. That's how you associate the thing. But yeah, like, I guess, how would you unpeel the onion for people that see this? Like, what is the proper way to think about crypto and technology and sort of how it's a neutral thing, and why this idea of like sort of scapegoating the actual technology is just very, very fundamentally flawed?
Yeah, absolutely, brother. So I'm an avid fan of approaching things with history. That's the book that I wrote, History and Evolution of Money, but, studied innovation as well. People forget history. When electricity was invented, people thought that, cities are going to get burned, people are going to get electrocuted. When automobiles started, they said everybody is going to get killed on a daily basis. And, don't do automobiles, don't do electricity. Look at us now. Yes, are there car accidents? Yes, of course. But we've got, traffic lights and a whole lot of other things. Automobiles has helped advance human society. Electricity has helped advance human society. So technology innovation, there are certain risks associated with it. But technology, like we have spoken about it, technology is always neutral. Does electricity care? Electricity doesn't care. Does Bitcoin care how it is being used? Bitcoin is a network. Bitcoin price goes down by 20%. It doesn't care. FTX gets bankrupt. It's a Ponzi scheme. Bitcoin doesn't care. Same goes with Ethereum. They just continue working as a decentralized technology network. How people use it. And if we want to look at it for a recent digital innovation, even before AI, when social networking came in, people said that, it's going to have some bad impacts. Yes, it has some bad impacts, but it also helps with discovery. It helps with democratizing information. It does fake information as well. But the technology doesn't care. It's people who use it for good or bad. Similarly, with these crypto assets, people are going to use it for good or bad. There are going to be programmers that are going to work hard to improve the Ethereum network. Then there are going to be other programmers that are going to create meme coins and do rug pulls. So there's going to be all kinds of people. At the end of the day, it's human behavior, coming back to the same point. But to basically say that technology is bad, it's like a very old school argument that time and time again, the incumbents and the status quo of that time have always put things down. Even with electric cars, right? Like we know in 1950s, electric cars, if we wanted, General Motors could have manufactured it. But no, they didn't manufacture it for whatever reasons. So the establishment and the status quo of the time are comfortable with how things are working. They don't want to be disrupted. And it's the job of the innovators to continue to disrupt for the benefit and improvement of human society. That's another topic, philosophical topic, but technology is neutral. It's human beings who choose to use it for bad or good. Coming strictly to criminal activity, TRM Labs, shout out to them. They do impeccable work, investigating it, helping IRS, for example, helping other government bodies to, track these wrong people, because we as crypto people do not want wrong things to happen. TRM Labs does some work. They did out research. Bitcoin crypto is hardly used as a percentage for these illicit activities. In fact, fiat currencies are used a lot more. Gold is used a lot more. Smuggling gold from Zimbabwe, getting into Dubai, whole lot of research done. So to attack crypto just because of that, why don't we attack other commodity assets that are traditional or the fiat currencies?
Well said on all those points. I mean, I just think it's a complete misnomer to point at the technology and not understand that it's human behavior, that we don't punish inanimate objects, right? Like, that's how I kind of view this. So it's just a total misnomer to look at the technology. Even when FTX went down, I think a lot of people are just completely missing the fact that that's a Bernie Madoff. Like, that's what you're dealing with there. It has nothing to do with the technology. So, this comes back to regulation. We need to regulate people and not the technology itself. And that's really what I expect to see eventually happen. But yeah, I mean, technology is neutral. If you wanted to do something like stop crypto, right, which if you're building, like Senator Warren, has come out and said she's building an anti-crypto army. Does that mean that you want to eliminate crypto or you want to stop the innovation? Because I think what you're saying there is like, okay, if I want to stop crypto, if you start to unpeel that onion, you would have to ban computers. You would have to ban electricity itself that runs the computer. You would have to ban the internet, I think, as well, to be able to actually stop crypto. So, and then you would have to break like the Constitution, like the open source code has already been, that's considered free speech in the US. And there's already a court case for that, which was related to the original cryptography. So none of these things make any sense. They're just political talking points. The arguments just don't stand on two legs. Like, that's kind of how I think about this. And you brought up good points on just, there's these, data analytics companies out there. TRM Labs is one of them. Chainalysis puts out a report every year that goes through, and Chainalysis, like both of these companies work with the, US government. And so this is how they're tracking things. But, public blockchains are immutable, which means they cannot be changed, right? So when you execute a transaction on Bitcoin, it's there forever. They're immutable accounting ledgers. And so if you wanted to track illicit finance, that's the tool you would use to do that. You would push criminals onto that thing. So that's literally your friend. This will be obvious. There's no doubt in my mind this will be obvious at some point. For some reason, it's still not. And Elizabeth Warren still wants everyone to think it's the opposite. There are mixers. So there are, mixing tools out there. And I think we've seen one of them was Tornado Cash, right? And that was banned. This is, again, a tricky subject because, again, that is open source computer code. However, I think if you look at the actual transactions that are running through this is like, it's all illicit finance. It's all North Korea. And so to me, that actually probably should be banned because it's clear that that's the use case of the thing. It's just mixing coins. And so that part of it I can understand, but crypto itself is actually a tool for tracking, I think, illicit finance. Anything. And then the other thing you mentioned, like most of the, illicit finance is running through the traditional system. This is very well documented. Most of the major fines are to the banks, and it's usually for bank secrecy issues, money laundering, AML issues, because there's a lot of illicit finance moving around out there, and it's big money for these banks to take those clients. So anyways, that's probably enough on this one. If you want to add.
Well, I think we've covered a lot. It'll be great to get, our friend Ari from TRM Labs on our podcast and have a discussion about it. But yeah, look, I think there are good actors in every industry. There are bad actors in every industry. Find out the bad actors, weed them out, but don't punish the instrument. And as a result of that, don't punish the innovation and don't punish, the advancement that this innovation can do for the human society.
Yeah, and it's unfortunate that we have to deal with this, and it's true of almost every technology in history. It does invite bad actors. It just invites bad actors, and there are many bad actors in crypto. I don't think anyone's denying that. It's law enforcement's job to find them and hold them to account, and that's kind of how I look at it.
I mean, just quickly on that, when we look at banks, the current financial system that we work on, if we talk in the crypto language, proof of work, proof of stake. The current financial system runs on proof of license, where somebody, gets a license from the central bank. That's irrespective of any country. Same thing happens in India. Same thing happens in Australia. Same thing in the US. It's a proof of license system. How many banks get bankrupt? We saw recently in Switzerland, there was a run on the bank. The other bank had to merge. And it was a massive bank, right? The Credit Suisse UBS merger. Same thing with the Silicon Valley Bank. Let's just say hypothetically that we didn't have a proof of license system where they can have a big daddy to come and protect them. They were bad actors, one could argue, right? Because of their, negligent risk management. So there are bad actors in every industry, even outside illicit finance, criminal activity and all because of negligence. So do we want regulation in crypto? Absolutely, we want regulation in crypto, but it needs to be well thought out. It needs to be sound, just so that they don't punish the innovation.
100%. All right, let's move on to the next one. We're just going to share, we've got 5 or 6 of these, Shiv, that we just want to go through because I think, and hopefully this helps people, because I know when I was new in crypto, and once I decided I was going to go public, but in crypto, you are going to deal with your friends and family sort of bringing these things up. So it's nice to be able to sort of have a response. So, okay, the next one is, I've seen this a lot, that, what is crypto? Like, it's just computer. People look at it and they're like, what is it? They don't understand why it has value. It's just these coins. And part of it's because crypto has all these meme coins. And, we're not going to get into that this episode, but there are a lot of weird things in crypto. We can certainly acknowledge that. Why do some of them have value, right? Because some don't. Right. And this is the confusing thing where I think it's important to realize that probably 99% of the crypto projects out there don't actually have utility. They probably won't be around in the long run. That's similar to startups. This is innovation. Most startups fail. Just because something fails doesn't mean it's a scam. There are scams, but just because something fails doesn't mean it's a scam. I think that's needs to be understood as well. But this idea that crypto is just computer code, there's no there, and these assets themselves are useless is deeply flawed. And we talk about it a lot on this show. Obviously, we go through on-chain data, we discuss business models, but I think people need to always anchor themselves to public blockchains are a new accounting system for the internet. And that's how I view it. You can talk about, other people will have different viewpoints on how they want to talk about the value proposition, but this is a new accounting system for data. Users can control data via tokens. And we have yet to see this really take off and become mainstream. But there's no doubt in my mind that is incredibly useful for the internet. We're introducing digital property rights into the internet, I believe. And this is just such a profound concept. We now have tokens and these new economic incentive models. They are confusing. It's new. People don't like change. People have trouble wrapping their head around change. That's how I think, people should react to that is, you need to deeply understand what the technology is, what it's useful for, and then you can have conviction around, why it's going to be around for a really long time. And it's not just useless computer code.
Yeah, absolutely. And I think you said it well, so I'll not spend too much time on this topic. That's what I've been doing at the Rundown podcast, right? That was the vision of our podcast. Every week we come, discuss the fundamentals, not focus on the price, draw lines on the chart, focus on what it does, tokenomics, business model, revenue model, fees, on-chain analysis, network activity. And I still haven't met, and I'm not saying that it's a reflection of my negotiation power or articulation skills. That's not what I'm trying to say. But I still haven't met a single individual who is open to learning about Bitcoin and comes from a very anti-crypto stance that after the discussion, he comes up and says that, okay, yeah, you are wrong, or eventually identifies himself as being hypocritical when he compares that this is fine for a privately listed company, private company or a publicly listed company. But for crypto, it's not. And then you realize, okay, that this might be hypocritical. So I think the difficult part, again, we come back to human behavior. A lot of people find it hard to unlearn things. And that's the thing that they need to, right? It happens with programmers as well. Initially, it was C, C++, and then a lot of people had to learn Java. They were like, no, C++ is the best language. It happened in the 90s. There used to be programming language wars. So it's very important with these technologies, you keep on learning. Now people learn Python and they are like, we're going to do everything in Python, Java, and all that. So you got to continue to evolve. You got to unlearn things if you're open. Thing is that if you are not open, you're going to be at the loss. It's not going to be the other person. People who adopt technology and innovation earlier, they end up, riding the wave. They're able to do something good with themselves with the time. But it's the people that do not adapt. They then either become very cynical, they become regretful, and it's their loss. So honestly, as a human behavior, people should be open to unlearning and learning. Here are the merits, and if there are no merits, like 99% of the crypto don't have merits, that's why we don't cover them on the rundown. So yeah, be open-minded.
Yep. 100%. So I think our next topic here is this is a great one. This is Bitcoin is bad for the environment. Bitcoin in particular gets called out on this one because of proof of work and the amount of energy that Bitcoin consumes. So let's just sort of unpeel this logic a little bit. I think one of the things that gets missed here, and the thing that sort of catches people's attention, again, sort of bold statements hit emotional chords and then you remember it. So saying Bitcoin uses as much energy as a small country, sort of, whoa, that really jumps out at you. That's a narrative that sort of takes hold without really sort of unpeeling the onion there a little bit. And so if you ask, okay, well, how much energy does it actually consume? It's like, it's less than 0.2% of 1% of the world's global energy. So that's like one way to sort of say, okay, what's the actual, how do we put some context around that? So that's just from total energy consumption. The next question to ask is, are we even asking the right question when we say, we're asking about energy consumption? Because really, energy is abundant. Energy is around us. There's renewable energy. It's not energy we're concerned about. It's fossil fuels, right? So you can use as much energy as you want if it's hydro energy and it's not polluting the atmosphere. So that's the second piece of this. And then when you start to look at that, you'd say, oh, interesting. The energy is the most costly input that goes into Bitcoin mining. And it just so happens that renewable energy is typically the cheapest form of energy that they're leveraging to do the mining. So there's a natural economic incentive for Bitcoin mining to use renewable energy sources like hydro, wind, solar, etc. And when you look at the actual percentages of it, that's what we see. It's actually the sustainable energy mix is almost 60% for Bitcoin mining. That's the most sustainable energy mix of any industry on the planet. So it's almost like the polar opposite of what the narrative is when you just kind of unpeel those few steps. And there's a lot we can go into in terms of like Bitcoin, the actual servers and how they're basically these location agnostic load resources that can do really interesting things where you can move this load resource anywhere and potentially build out renewable energy sources. So if you have a hydro energy source that's not located near population that can actually leverage that energy, you can bring the Bitcoin mining machines right next to the energy resource and leverage that to mine Bitcoin, and you've converted that energy into a store of value, and you could potentially monetize and build out the infrastructure to move that energy to homes and hospitals and communities. So just really, really interesting. This is a deep, deep topic, and we could go on, but I want to get your perspective on this because this one's still out there. This one hasn't been, we're going to keep seeing this, but eventually this is going to be completely debunked. I mean, I have seen Ernst & Young, and I think it was Ernst & Young, put out a piece. There's now mainstream media starting to cover these stories, which is exciting to see. So hopefully we get that narrative out there a little bit more.
Yeah, look, I think Bitcoin and energy you need to firstly understand it philosophically. And look, I have been guilty of, knowing about Bitcoin and doing nothing about it because I wasn't able to unlearn what I learned in my undergrad. First heard about Bitcoin in 2011, saw the narrative, okay, don't touch it. It was only in 2016 I started investigating it. And the more I got into it, the more I realized, actually, there is so many merits to this thing. How could I not be part of it? So initially, Bitcoin was a concept around money. And to be honest, money is such an important concept. It's the most important social contract in the world. Money is what helps us ties up. Henry Ford famously said that I want to create a currency out of energy. And the BRICS are talking about doing something like a commodity energy-backed basket of currency. I do not know whether they're going to be successful because those countries don't like each other. So the philosophical concept of decentralization, the philosophical concept of money, once people understand it, that's when they start realizing the power of the Bitcoin network. I'm actually educating myself a lot on, energy, because I don't come from an engineering background. And the more that I'm learning about it, the more this narrative, this ability to capture value that previously you were not able to, because you would, like you said, create the infrastructure only if you're able to provide the goods to that, respective place. But now you can capture that value in this digital format and then you can use it. I think that's a very interesting concept. I am educating myself more in this space, but people should educate themselves on Bitcoin, decentralization, money, energy, all this intersection, the economics, concept of economics. Then they'll be able to grasp that this is bigger than anything. Larry Fink famously said, Bitcoin is bigger than the government, after initially in 2017, famously saying that crypto is an index of money laundering. So for such a established individual who founded BlackRock in the 80s, 2017 index of money laundering to 2024 that Bitcoin is bigger than government, I think we still haven't grasped the philosophy and economics of Bitcoin and how important it would be for the human society. And the reason why we both are not discussing Ethereum or others is because they are proof of stake. So they are very energy efficient. So this argument is mostly spoken about Bitcoin when we talk about crypto. Just one thing, I know I've spoken a lot, but when we talk about Bitcoin is bad for the environment, right? A lot of people just say Elon Musk said that it's bad for the environment. So that's why, it's not good. That's why. And that's why those individuals buy Dogecoin. They don't critically think because they follow Elon Musk. Do people care when they, use electric cars? They don't have the same argument, right? They use electricity, right, for the electric cars. Do they ask where are they getting the energy source from? So why are we singling out Bitcoin? Why are we not talking about gold? We've already discussed gold doesn't have any industrial use cases. It's a traditional monetary asset. Gold produces more carbon emissions. Just look at the amount of, gold mining sites, whether it's in Brazil or in Australia. It's terrible what happens to gold mining sites after all. So again, being hypocritical and singling out Bitcoin, I think it's unfair. It's time people educate themselves and realize that this is bigger than a lot of things that we have covered.
Yeah, no, it's a good point on gold. It's like gold uses way more energy. I mean, like gold does have, people would argue, okay, it gets used in technology, it gets used in jewelry, but mostly it's a monetary asset that, that's why people use gold. But yeah, great point on like, why does Bitcoin get singled out? That's the fascinating actual thing to me here, because like YouTube uses more energy than Bitcoin, right? But nobody thinks about this. People don't think about, how much energy their washer and dryer use, right? It uses a lot of energy, but they value being able to wash their clothes. It's really, they just think Bitcoin doesn't have value. Maybe they're upset that people are making money on this thing that they don't understand. And so now the story is about energy. Yeah, it's sort of bizarre. I think these are very complex topics. Bitcoin itself is extremely complex. We take it for granted because we're in the industry, but it's complex. Energy's certainly very complex. Even the most educated segments of the population, and ask them how energy gets to their house and how they use it, probably don't know. So it's understood, but yeah, I think great point on just why is Bitcoin being singled out over all of this? I mean, I guess it's really that what I said initially. If everyone thought of YouTube as using as much energy as a large country, would they think of YouTube differently? No one's talking about that, but we hear it with Bitcoin. So I think that's it. We can move on to the next FUD argument, which is usually Tether. This one will certainly come up again, I think. I think this was related to last cycle. We had the academic piece come out looking at the correlation between growing market cap of Tether and how that's correlated to the price of Bitcoin. So implying that somebody is minting Tether, on the back end, potentially without that being backed by dollars, and then buying Bitcoin, pumping the price of Bitcoin, whatever. This is an interesting argument because I think the people making the argument, Tether could have some issues with it. We don't really defend Tether. We think they should be more transparent with their reserves and all that and have audits. With that said, when you make this argument, you fail to recognize that that's actually how the fiat system works. You have fiat currency that gets printed out of thin air by the Fed, And a lot of that goes into the stock market and it pumps asset prices and it makes the price of goods and services cost more. And this is why we have to invest and why you can't just hold dollars. So that's literally how the system works. And then, when it comes to Tether, like I said, we think they should be more transparent. They should be audited. But like the market tends to test Tether, and it has tested Tether many times. And Tether met 10%. So 10% of Tether was withdrawn in 24 hours during the Terra Luna debacle. 10%. That would take down literally any bank in the world. If all of the depositors rush to the bank and grab 10%, that takes you down. They were able to meet all those redemptions. So to me, it's been tested in the market. That's the most important thing to me. But yeah, curious your thoughts on the Tether thing.
Yeah, look, I think we've covered it. I know we've spoken privately as well. Just quickly, market structure has changed. We've got institutional interest and institutional inflow coming to Bitcoin, actual Bitcoin, not the Bitcoin futures. Now with the approval of spot Bitcoin ETF, Tether may be influential during 2015, 2017. Tether is nothing in comparison to these Wall Street institutions, especially, Fidelity and BlackRock. Tether is nothing in terms of the balance sheet power. Yes, Tether needs to be more open, and all respect to Tether because they were the ones who invented stablecoin. When you think about it, nobody came up with the idea of stablecoin before them. Credit to them where credit is due. Yes, they need to be open. But yeah, like you said, they made, during Terra Luna, a lot of people, shorted Tether and it lost its peg, but they were able to meet redemption. So you got to give credit to where it's due. Quick point about the fiat system. It comes back to the same point, right? Like people are just hypocritical in their defense. They single out Bitcoin, they single out Tether. But that's literally the concept of the modern financial system. Again, people should go back to history. Before 1971, national currencies used to be backed by commodity. So we used to have the commodity theory of money. It used to be backed by gold. Before 1873, US dollar used to be backed by silver. 1792 to 1873 silver standard. 1873 onwards, it was the gold standard. But after 1971, after the Richard Nixon decision, we had a free-floating currency exchange, and none of the currencies used to be backed. And central banks used to supply the money like they always did, but now it is not backed by anything. And then there used to be the money multiplier effect when commercial banks used to give out loans. So literally, like you said, 10% of depositors go to the bank and say, give me back the deposit. Bank would be bankrupt because of that concept of, money mechanics that we do currently. So again, why are we being hypocritical? And honestly, now there is no reason to bring this up. So much of institutional flow going to Bitcoin. Tether, it can't impact Bitcoin price. It may, but...
We have an ETF. Yeah, that's the other thing. We have an ETF. So it's like, I think the SEC looked at this, obviously, and they wouldn't approve the ETF if there was some manipulation with Tether. So that's the other piece. Yeah. All right. So a couple more, and then we'll wrap this up here. So the next one I see, this is a little bit more nuanced. This is around decentralization and the idea that like the crypto community is saying it's decentralized, but it's not really decentralized. And I think this comes up related to like FTX and service providers that have gotten in trouble with doing sketchy things, breaking the law, frauds, scams, rug pulls, and sort of the layer on top of these blockchains again. So I think we need to sort of define when this comes up, crypto's not decentralized because FTX, what are we actually talking about here? So the way I like to think about this is, to me, the conversation around decentralization needs to be anchored to like the actual public blockchains and protocols themselves. The reason crypto is introducing this concept of decentralization is because the networks themselves need to be permissionless. And we cannot have a world where large companies own the databases that track all of the user activity and give you access to your data. That's what we have today. So we have that with Google, with Facebook. These are private databases. Public blockchains are permissionless, open databases that anybody can access, anybody can audit the data. So this is what's important. The only way to do that is to have a decentralized network of computers that validate all the transactions and nobody can have control over that. So to me, that's what's important. What can be built on top of that is the FTXs of the world and the places where users interact with the blockchains and protocols underneath. So the top layer, if you're dealing with an application, that's not really designed to be decentralized, right? There's a company behind that. They're providing you an interface that then interacts with the blockchain underneath. So for most people that will ever use a crypto product, they're never going to understand the decentralization part of this because they're going to go to a web interface just like they do in Web 2. The difference is you're probably going to connect a wallet to it, but it's not going to feel like you're doing peer-to-peer things because you're going through an interface. What's important is that the database underneath that is decentralized, and anybody can build a business on top of it. Anybody can access the database. And if you're a consumer, this is interesting because it makes it really easy to switch, because every service provider has the same right to access the same database. So they're giving you services and providing access points. But if you don't like it, you can switch your wallet, basically disconnect your wallet and just connect it to another interface. And this is very simple to do because the database is shared, the global accounting database. So to me, this is what people should focus on when they think of decentralization. And if you're just looking at like something like FTX, you're kind of missing the forest for the trees in terms of how this works. So I'm curious, maybe a little confusing to people, hopefully not.
Well, I don't think it was confusing. I think you articulated it pretty well. Yeah, look, I also hear this a lot. And look, I'll probably be the first one to raise my hands and say that prior to 2022, my personality was a lot more out there, in the sense that I used to be really focused on the decentralization mindset for crypto projects. But now I've kind of like understood the point that you have raised, that even if certain projects are not sufficiently decentralized, like we've covered Solana, can be argued is not sufficiently decentralized at the moment. The reason for that is it's new, because all these, public blockchain networks at a certain point during their initial phases were not sufficiently decentralized. But that doesn't mean that we shouldn't use it. Solana has got its own use case, lower fees, better UI, UX. People started developing into it. Hopefully, over time, their architecture is going to allow more decentralization, which they have said that they would. So one quick point, in addition to what Michael said, just because a project is not sufficiently decentralized, one shouldn't be quick to dismiss it. And I have been one to quickly dismiss it initially, but over time I've realized, trust the process, trust the project. Eventually, with their architecture, they would be able to decentralize it. Why it is important, I think you've covered it. And for people out there, like I think it's a good example that you give, right? Like all the social networking interactions we do, let's say on YouTube. Let's just take, for example, we both got YouTube channel. We got no idea who our YouTube subscribers are. Unlike Substack, right? We don't have an idea. But let's say if there was a decentralized YouTube, somebody subscribes to somebody's YouTube channel, we'll be able to identify that, okay, these are the users. They would be pseudo-anonymous, but we would be able to identify, like, these are the users. What are they doing and all? Whereas now, the data, and it's not just with YouTube, it's with Amazon as well. I have a book that has been, it's sold on Amazon Marketplace. Who buys it? I have no idea. I rely on the reviewers. So people who publicly review. I've sold, hundreds of books. My book has been sold a lot in the last 3 years. It's no J.K. Rowling, but it's been sold a lot. Only like 1% of the people actually end up reviewing the book. So I do not know who buys the book. I depend upon the reviewers. But if there is an Amazon sort of a marketplace on the public blockchains, people would be able to find out who is actually buying things on this immutable ledger. What are they doing? How do they interact with other parts of the blockchain network? People are not able to realize it, again, because of they don't go to Etherscan. They don't go to the Block Explorer. But eventually, when they start looking at the Blockchain Explorer, they'll realize that this is actually what we mean by triple entry accounting.
Like you said, I mean, every blockchain starts centralized, and there is like a process to becoming decentralized. Bitcoin, there was one person mining Bitcoin at one time. It was very decentralized. So there is a process to becoming decentralized. Bitcoin has gotten to that point. Ethereum's gotten to that point. I mean, yes, there's a narrative on Solana that it's still centralized, but if you look at the node infrastructure and the number of validators, I would say Solana is sufficiently decentralized. It takes time, and when a project first comes out, it's impossible for it to be decentralized. And this is something that Congress has to sort of look at and come up with a framework for how these things can come to market and then eventually introduce tokens, which tokens play into this decentralization discussion because that is the thing that you use to create these economic incentive structures that allow the network to be decentralized. So that's probably a separate discussion there, but we can probably move on from the decentralization discussion and just wrap it up with like probably the last one. And this is one that I actually was somewhat concerned about initially when I got into Bitcoin, was that the government could ban Bitcoin.
This is the biggest FUD.
Yeah, I think what made me comfortable at the time that this was not going to be the case was, at least in the US, we have And China has banned Bitcoin. So, China has a very different culture from the US, but China has banned it. I don't even know what the current state of it is. I think it's sort of allowed now, or at least it's allowed in Hong Kong as a growing market. But what made me realize that this was not going to be banned was that there's court cases that are precedent for open source computer code and free speech. And it was actually tied to cryptography. So it's like sort of related to crypto in the 90s. But that was what made me realize that like there's already been court precedents on open source code, and it would be like almost impossible to ban this from a court perspective. But you also have the aspect of like, how would you actually ban Bitcoin? It would be like you'd have to shut off the internet. Ban, like we talked about, you'd have to shut off electricity, or it would be almost impossible to kill Bitcoin. You could certainly make it difficult by, sort of closing off the endpoints to the network, which is where people onboard the exchanges. That's potentially an attack vector if you wanted to disrupt it, but it would be really hard. I think if that ever happened, I would think that would be a huge marketing campaign for Bitcoin, and that would be good for Bitcoin if they tried to do that, because people would want to own Bitcoin if it was trying to be shut off. So yeah, that's my view on will the government ban it? Could it even ban it? And then the other piece of it is like the thing that I talk about a lot in my writing is game theory, and just deeply understanding like there's actually an incentive for the US government to like want the most Bitcoin to be here, and to support innovation, which we haven't seen this coming from our Congress, but like there should be an incentive, a financial incentive, and an incentive just almost security, like global security, to support this and to regulate it in such a way that we could foster innovation, create jobs, and that typically helps the economy. So yeah, those are my, I guess, initial thoughts on this one.
Yeah, look, government banning crypto is the biggest form of FUD. And I know it because I'm an Australian citizen with an Indian ethnic background, educated in the US. I'm just going to quickly touch upon the game theory, and hopefully that way, the viewers would get an understanding of my views about this FUD, which is the biggest FUD. And I'll share my stories and learnings from all these three countries that I've been part of. So Australian economy is a fantastic economy. It's a very robust economy. It's got public debt, but it's hardly any public debt, especially when you compare it to other countries like US and India. So great economy. It's a very commodity-backed economy. It's a small country, 28 million people. I'm currently residing in New Delhi, the capital city of India. The population of New Delhi is the same size of the country of Australia. It's a small country. They have legalized Bitcoin since 2013 with clear taxation rules. One can argue very pro-crypto. It really doesn't matter to them whether they ban it or not, because it's a very open society, very open thinking. India, on the other hand, for reasons which are fair as well from their respect, they tried banning Bitcoin and crypto, just like how China did. In mainland China, it is still. And then the Supreme Court over here eventually overruled. And now, since 2022, they have introduced very unjust taxes on crypto as an asset class, which if somebody investigates, they'll identify the hypocrisy between equity as an asset class and crypto as an asset class. And basically through the introduction of that, and it's not just me saying, the crypto entrepreneurs of India are also saying, have basically killed the industry over here. But has it been outright banned? No, it's still legal, but use has reduced. Coming to US now, we have certain politicians who want it to be banned. We cover Elizabeth Warren often. Joe Biden is, I think his administration is introducing a 30% mining tax, which will probably make the US miners think about going to a different location to start, because, it's again, game theory, right? You want to be most efficient when you're producing Bitcoin. So quickly, game theory aspect, you talk about it, I talk about it as well at a high level. Countries that are going to ban Bitcoin, they are digging themselves a hole. It's a decentralized network. We've covered that. It's a good store of value. We're not going to go about it. If I take about the, petrodollar market just quickly, the Middle East is thinking about getting out of the US dollar, using other currencies. They find it tough to use other currencies. India is buying oil from Russia. Russia said, we don't want Indian rupees. And they said, what else can we give it to you then? So these countries don't trust each other's currency. US dollar, because of after the Bretton Woods system became the global reserve currency, and that became, the currency for global trade. But now we've reached a stage where countries don't trust each other to use their national currencies for global trade. So Bitcoin is actually a friend of all governments. And you are right. And we covered that 2 episodes ago when I asked you that, isn't this good for the US economy? And I think this is good for the US economy. And that's where, again, the game theory perspective comes in. Australia should start thinking about holding Bitcoin reserves. They are a very rich economy, but other countries in Africa, El Salvador, the president came out recently and openly said that this is the amount of Bitcoin that we've got in our wallet. So government has benefited from there. So that's where people, authorities need to start realizing blockchain technology, great technology, use it to combat illicit financing. Similarly, Bitcoin as a monetary instrument, and I have continuously gone with that. Bitcoin, according to me, is a monetary asset, just like how gold is. If you can hold gold as reserves, you should hold Bitcoin as reserves, because eventually when you realize that a country has got a lot more of Bitcoin, you're going to be a late entrant. So again, game theory perspective, you got to hold this commodity, according to me, from a country perspective.
Yeah, I would think there's an incentive to have more Bitcoin within your borders. And we've seen, there are some, I think, cities, even in the US, that have embraced Bitcoin or crypto. Like the mayor of Miami, for example, has been really pro-innovation. And Austin, Texas is another area in the US that we've seen like a lot of crypto companies like around there. You mentioned El Salvador. They made a move to make a legal tender and bought some Bitcoin. And I think that's worked out pretty well for them. So I find it hard to find an example of a geographic region that has embraced this and then it going south on them in some way or becoming a problem. It's actually, I think in every example out there has worked out. Obviously, the price of Bitcoin has to keep rising. People could argue that wasn't the case maybe last year, but I think that's a pretty good review of the FUD. I hope this is helpful for people that are going to deal with this potentially as we go through this cycle. And if your Uncle Bob, is bringing up some of these points, next time you're at a family gathering, you could just share this episode of the rundown with him.
Absolutely. I think this would be, our most shared episode because, we all go through these questions still. And I think maybe that's what I can do as well. Instead of spending half an hour discussing it with somebody, I'm just going to quickly send this episode, spend 1 hour with your family, hear it, and then come back to me.
Yeah, I hope so. I hope that's how this can be used. And we're not trying to just defend everything about crypto. There are problems in crypto as well, but I think it's important to just have a perspective on some of these arguments that are going to come our way. So we could probably do another episode on the things that the crypto industry actually gets wrong as well. We could probably go there as well. Great episode.
Absolutely, brother. And I think, we are, all for strong regulations for crypto. But it needs to be sound, it needs to be well thought out, and it can't be hypocritical, where you are, basically banning the instrument through taxation, or you're banning the instrument because doing business within crypto is no longer capitally incentivized to do it because it's just not feasible anymore. You can't treat this asset class hypocritically. You need to be friendly with it just like how you are friendly with other asset classes. And yes, of course, you should regulate it. But if you don't get into it, you don't promote it as an innovation, that game theory is going to bite you and you're going to be late. And people who are late in innovation and technology, it takes a long time for them to be economically profitable unless they are a pool of commodities like the Middle East and Australia have, and even in the US and Russia have.
I think that's well said. I think we could probably end it with that.
Absolutely, brother. Thanks a lot, everybody, for tuning in to the 20th episode of the Rundown Podcast. Thanks a lot for all your feedback and love. Keep tuning in. We'll continue to try to keep bringing this up every week. So thanks a lot. Please share it with your friends, with your family if you thought this was useful, or give us your feedback as well. But hopefully until next time, we'll see each other again. And thanks a lot again, Michael.
Yeah, thank you, Shiv. Thanks, everybody. Take care.